Well, on Wednesday, the U.S. Central Bank, the Federal Reserve, or the Fed, concluded their two-day meeting, and the Fed has signaled that it plans to begin raising its benchmark interest rates possibly as soon as March. In a statement issued after its latest policy meeting, the Fed said it expects that it will soon be appropriate to raise interest rates. Although the statement didn't specifically mention a hike rate in March, half of the Fed's policymakers have expressed a willingness to raise rates by the month of March, including some members who had long favored low interest rates to support hiring. The Fed's chair, Jerome Powell, expressed his view that inflation in the U.S. is way above target and that the Fed must take steps to control inflation, such as hiking interest rates. Indeed, U.S. inflation rose by 7% in December, the highest in nearly 40 years.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept its policy interest rate near zero and stated its expectation that an increase in this rate would soon be appropriate.
So the U.S. Central Bank, the Fed, is planning to increase interest rates, could be as soon as March. But how will that impact Indonesia? Well, we are going to discuss this further with Professor Ari Kuncoro, who is an economist and also the rector of the University of Indonesia. Hi, Professor Ari. It's such an honor to have you on the show. Thank you for joining us.
Good evening. Yeah.
All right, Professor Ari, so I want to ask you, as we saw just now, the Fed could raise interest rates possibly as soon as March. Bank Indonesia's Governor Peri Warjio said that this will impact Indonesia's financial market. So can you explain to us in detail, how will the Fed's rate hike impact Indonesia?
Yes, I think this is the classic theory of the asset substitution. So there is an inverse relationship between the yield and the price of bond. So if the Fed hike the interest rate, then the yield might increase, and that will make the bond cheaper. And that will induce people to move to buy bond, to take the opportunity to buy bond when they are cheaper. And it will happen not only in the US, but also across the world. When I saw in the previous session that all US index, all in red, that suggests that the movement from stock to bond has already been happening. Yeah. But if you look at the IDX index, then you see that the movement is up. So it's very interesting. So it might happen that the flow actually happened inside US from the stock to bond, but Indonesia, the flow is actually the opposite. It will happen from the outside to inside. I don't know what will happen in the next 2 weeks or 3 weeks because the data is very short. But I think this year around, because of a pandemic, because of the anxiety of the investor, many things happen. But in the classic case, yes, there will have impact. So the classic prediction is that there will be outflow from the emerging countries like Indonesia going to US, seeking for a cheaper bond, and it will have impact on the exchange rate, of course. But right now, situation is very, very different from 1998, from 2008. So many things will happen. Not only interest rates that actually will impact financial market, but also other things, including growth, how good they handle the pandemic, as well as how good the political situation in the US, as well as the conflict around the world. For example, China and Taiwan and US. Also local conflict like in Kazakhstan. All things interrelated. But the core theory, yes, if there is a hike in the US the Fed interest rate, the flow usually flow back to US. But we will observe in the several days what will happen to Indonesia. What I've been seeing until now is actually rupiah is still relatively stable.
Yep.
So the outflow is actually counterbalanced by inflow. So the movement of the rupiah actually is only within the narrow margin. That explains that the thing might be different from, let's say, 2 years, 4 years, or 5 years ago.
Right. So are you saying that the capital outflow that could happen from the interest rate hike this time around, the capital outflow from Indonesia will not be as worrying, the rupiah will not be as affected because we have stronger fundamentals? Is that what you're saying?
Yes, because the capital outflow already happening in 2021. It's not the massive one. So the investor, portfolio investor, has been taken position long time ago because they think that the Fed actually behind the curve. So they can take a position. So the impact of the announcement in the next week or so will have very little impact because they already prepared. This is unlike in 2008 where suddenly the governor of the Fed announced that there was a hike. Yeah? But right now, the Fed is like give signal, subtle signal that okay, we might want to increase interest rate, but wait a minute, we also want to see what will happen next. So you should underline the word could. The Fed could increase the interest rate in March, and we don't know when in March, early March, middle of March, or late March. That also send the message to the market that the thing might not be as bad as we thought before. Maybe this is just a posturing by the Fed. Yeah? They want to control the inflation, that is their mission. But at the same time, they want to disrupt the financial market in the U.S. But as you see that, even with the announcement, pre-announcement in the U.S., all indicators show that mostly red. But it has not happened yet in Indonesia right now.
All right, so you're saying the Fed has given signals, investors have taken positions, but you said it could happen in March. I mean,
happen. That is the key word.
Right.
You have to look at the word by word.
Okay, so I mean, from your knowledge, let's say in the next few weeks to come, is it likely that they will increase rates? From what we know so far about inflation, even Biden is also telling the Fed to increase, to control inflation. And in a few weeks, the rupiah, like, how do you project it? If they raise rates?
We'll be talking about the Fed first.
Yeah, okay.
Actually, the Fed is still in dilemma.
Okay.
The one that actually drives the growth in the U.S. right now is actually housing market. That has been booming because of the low interest rate. So if the Fed is not careful, that may put the price of housing as asset downward by 30%, and that will hamper the growth. So there is a little bit uncertainty here, okay? So if actually the Fed observes that the growth will be in danger, then they might be, wait a minute, March, but first we don't want to increase interest rate, but we just want to streamline our balance sheet, right? The impact actually will be the same, although the increased interest rate will be happen later on. So it will happen gradually. Yeah. Okay. So it's kind of
uncertain, right?
Mixed message. But it is good. For Indonesia, it is good because a lot of uncertainty around the world. And for us, the uncertainty this time is quite good because not many people responded to this. So everything is still in the status quo.
Okay, just just very quickly, Professor Ari, I want to ask you, we have about maybe 30 seconds or so. What do you recommend investors should do now? You say there's uncertainty, they could not. What should investors do right now?
Okay.
Just very quickly.
Investors should looking at the long-term prospect. Even if there is a big drop, short-term big drop, then the long-term gain, long-term performance of the stock may outweigh the short-term big drop. So don't panic. You should not in the panic selling.
Okay.
Because you need to know the stock by its quality. Don't dump stock that has high quality, because the saying goes, everything goes up will be down, but everything down will be goes up. That is very, very normal in the market. So everything will be going in cycle. So don't panic. That is the main message. This is different from 2008 or 1998.